Welcome back, everyone. You're watching MoneyLIVE Nordic Banking Online Festival. I'm Juliette Foster, and I have with me a panel of experts who are ready to dig even deeper into how AI-driven hyper-relevance can bring a new world of convenience for today's customers. So let me introduce the panel to you. First up is Reuben Hjelte, who's Head of Analytics at Swish. Hi, Reuben. How are you?
Hi, I'm doing great. Nice to meet you.
It's nice to meet you too. I'm glad you're with us. We also have with us Heikki Räyhäntausta, who's Head of Emerging Technologies at OP Financial Group. Hello, Heikki. How are you?
Hi, I'm doing good. How are you?
Excellent. Well, the fact that you're doing good makes me feel good, so that's cool. That's a great start. Also on our panel is Yngvar Ugland, who's an Executive Vice President and Head of NewTechLab at DNB. Hi, Yngvar. How are you?
I'm pretty good. Welcome to my living room.
It's a very nice living room as well. It's a bit more interesting than mine. But finally, we're also joined by Reuben, Sagar, the one and only. He's a Regional Director at Onfido. Hi, Reuben. How are you?
Doing very well, thank you. Yeah, good to be here.
Excellent. Looking good. Okay, plenty of ground to cover, and I'm sure that you will also have your own questions that you will want to put to the panel. So feel free to do so. We'll try to get through as many of those questions as we can in the time available. So if there are any questions or comments that you'd like to put to the panel, then use the Ask button on your screen. Okay, so let's kick off. And I want to start first with you, Heikki, because look, there's been a lot of talk about hyper-relevance and convenience. We know that it means different things to different people, and also it can impact on people in various ways. So can you start by sharing some of the best examples that you've seen of hyper-relevance in action and how this varies across the various products?
Okay, maybe I should first try and explain what hyper-relevance and convenience means to me. Because to me, it's so much more than personalization. It's dynamic, constantly changing. It's there with you whenever you need it. It's contextual, it's seamless, and always on. And I have to excuse myself and pick up the best examples out of the financial industry, because some of the best of them I can think of are not from financial industry yet. So like real-time health data from wearable gadgets, driving behavior data from vehicles, smart home data from various devices, and so forth. They're all almost invisible. They feel natural. They fit the purpose. They provide you insights, and you can also interact with them. And the best of them play well with others and share data in an ecosystem. When I think about our businesses, hyper-relevance could be like a location-based or transaction-triggered insurance, or funding for that matter, or anything related to the examples I gave, because there are lots of valuable data points out there if you only got access to them. But at the end of the day, we need to try and understand customers' needs in given circumstances and evolving context, rather than focus on past behavior and static attributes. And today, really, connected devices, digital engagement, predictive analytics, artificial intelligence, machine learning, and stuff, they make it possible. So that's my take on hyper-relevance.
Sure. And that's a lovely broad brush sweep description. And I want to bring in Reuben off the tails of that, because the question to you is, how might that data be used to actually tailor customer engagement to the individual?
Yeah, well, when it comes to our industry and payments, personal finance services, as Heikki mentioned, there's almost no end to the number of optimizations to customer interactions that data make possible. Budgeting, price comparisons, recommendations, credits, quicker checkouts, all the interactions are extremely data driven, and they're personal by their very nature. So they are very well suited for consumer applications in the banking and finance industry. And when personalization works well, I think it can be almost transparent to the end user. Everything is just more convenient and adapts to your behaviors. by now, I also think that most can agree that we're at the point where the technology really can sort of deliver on this hyper relevance. There's infrastructure to process data in real time. Consumer devices are powerful and connected, so that's good, I guess. But the main challenge is getting everyone to actually use and benefit from these possibilities. The really hard part is building enough trust with users to convince them that it's worth it for them to make whatever configurations are necessary, granting access rights to for data processing, turning on the settings, identifying themselves as etc. So for us at Swish, this means that we could implement a lot of functionality that's hyper relevant, but we have to consider every interaction with a user that isn't sort of directly related to whatever task they're doing as a pretty expensive and sort of an investment in the customer relation. So we try to think of it strategically and not just personalize everything just because we can.
Sure. And let me bring Heikki back into this, because look, given everything, how do you think banks can actually improve their use of advanced analytics so that they can go above and beyond what the customer expects?
Okay, in order to go above and beyond expectations, one would need to first understand the expectations, I guess. You just can't assume them or make them up. So I think we really need to elevate the game to a new level where impressing the customer with the unexpected is the goal. It's like, you know, I didn't know that. How did they know? Or just what I needed. That kind of a, you know. And in the past, I think banks have had, you know, vast amounts of transactional data generated through their core businesses for a long time and periods. But these data sets need to be boosted with external and also inferred data, because the aggregated information is much more valuable than some of its parts. So you can't always anticipate the customer needs on readily available data alone, no matter how rich it is, because you need to understand how you can help the customer here and now. Therefore, you would like your customer, and you really want to share his or her dreams and aspirations and even beliefs with you. Also, maybe some unexpected events. Can I take a few examples? Maybe the customer is planning to move to another city or even to another country. Maybe she's planning for an early retirement. Maybe she's planning to become an entrepreneur. Maybe she cares only about environmental sustainability. What if she won in a lottery, got married, had a baby, got laid off or divorced or terminally ill? All kinds of private situations and events you can imagine, but definitely wouldn't know unless the customer shared them with you. So the customer needs and expectations are in real life very different to what might have been drawn out of from readily available data sets and analytics alone. Therefore, I think that we need situational intelligence, which is conversational and bidirectional. And in order to achieve that, we need to have trust between the parties. That's imperative. And obviously, we need to, as a bank, we need to offer a clear value in exchange too.
Okay, interesting point there. And taking that, Yngvar, how do you think that real-time analytics can bring extra value to the customer experience, particularly if you're using that situational intelligence bank that Heikki was referencing there?
Yeah. So one of my favorite examples is also from outside of the financial industry, but the thing that Amazon does with anticipatory shipping, like they know when you're going to buy, or they know before you're going to buy that you're going to buy it soon, so they just ship the goods to a warehouse very close to you, which is that seems like magic. But the customer experience that comes with that is just like, wow, how did they do that? And that's something that you can do because they have enough contextual information about you to do that anticipation. Inside of banking, I think my like the holy grail. The way I see it is, I like to frame it easily as a customer of DNB, you should never again be broke, and that basically means you need to understand all the context that a customer will be in all the time, and always give the best advice for a person to have to make the best possible financial choice, which is of course super hard. But that means that it's the contextualization, like Heikki talks about, is super important. But you can also take it out of just like the analytics part, then you can look at other ways of using AI-driven convenience for the customers. Like an example that we've been dealing with for some time is like when all these millions of incoming calls comes to our call centers, instead of having that chit chat trying to figure out, is this person the person he or she is saying that he or she is, why don't we just use the voice of that person to use biometric AI to verify the person, and which is super for customer experience. It's faster, and it takes away this kind of, you don't really trust me. Plus, we don't even know if it's secure enough with all those control questions. And you can also think about things like, I know Heikki and OP has also been playing with, like pay with your face, which we thought would be okay. Is it really more convenient than just tapping some plastic? How could it be more convenient than that? But that was before the pandemic, and I was seeing that because of touch anxiety, all of a sudden that becomes a big thing. You don't want to touch anything, and if you can leave it from maybe touching that device and just pay with your face or your biometrics, it turns out that has changed. So and kind of the challenges of this is twofold. One is getting access to high quality data and broad enough data, like Heikki says. You need to understand the full context, which is like Amazon is super good at that, and that's also why they want to go into brick and mortar, like Whole Foods. They want to understand more of the context. But when you're born digital, you kind of always been digital, always have had access to data. That's something that we have to like retrofit within banks. Like my company is almost 200 years old, and we didn't have computers back then. And the other thing is, like someone mentioned, like how did they do that? What kind of information do they know about me, since they knew something that I don't know? So I think that's kind of the challenges.
Yeah, so those are the challenges, but within those challenges, we've also seen the benefits. And I want to bring Reuben into the conversation, because look, what about the risks? That's the key thing, because I'd like to know from your perspective, what challenges could arise as real-time capabilities are further implemented? Because again, some people may find this a bit too intrusive, that you know what we're going to buy before we've even made that decision ourselves.
Yeah, and I think that's a really interesting challenge for financial services. As the guys have said, we've kind of seen AI and real-time decision-making sitting pretty much at the periphery of the customer journey in the past with financial services. So we've seen the use of chatbots, we've seen the use of AI to allow for some additional level of customer service, perhaps, or maybe be part of a loan-making decision process. But as AI and more automated decision-making becomes part of core decisions around that customer's journey, we have to be much more certain about the decision we're making. So as we start to allow a customer to be onboarded to a bank, as is the case with Onfido and the controls we put in place, or as a decision around a loan or a mortgage is completely automated, we have to be really, really sure that we're making the right decision when the bad guys try and make that application and we block them, but actually thinking about the risks for the customer and thinking about the customer, the risk for the bank in terms of their reputation. We have to be as concerned about making the right decision about the good guys. So the good guys that are signing up for a bank, wanting to open a bank account, wanting to take out a mortgage. We have to make sure we're using AI correctly. And one of the points has been around data quality. And I think that becomes more and more important, especially when you're thinking about the good guys. So what that means in practice is, if Onfido is verifying an identity as part of an onboarding process, we know in practice that 98% of applications are from people that have good intentions. They're just individuals that want to open a bank account, access financial services. So really, you're looking at quite a small number of individuals who are in fact fraudulent. And so what we really need to do is make sure the data and the quality of data for those individuals that have those right intentions is good quality data, because that allows us to do our job in a much better way. And so providing tools to allow for capture of good quality data is really, really important, because whatever AI is sitting in the back of it, whether it's a chatbot or whether it's an Onfido style document check, whatever it might be, it's only as good as the data that's coming in. And I think that's a really interesting challenge. But yeah, so risks wise, if we're doing something fundamental for the customer, we've got to make that decision the right decision.
Sure, I think it's something which is going to crop up as well in the questions which we're expecting from our viewers, and which brings me quite nicely to them, in fact, just to encourage them to actually send in more questions using that ask facility on the screen. We want to hear from you, and we'll try to address as many of those questions as we can in the time available. But I want to move the discussion forward a bit more and bring it back to you, Heikki, because from your perspective, what are the new kinds of value-added products and services that could be developed if we have an increased free flow of data?
Okay, I presume that with the free flow of data, you mean like, open data, which is publicly available and non-personal on economy, stock market, health, employment, property prices, crime rates, carbon footprint, and what have you. So I think those are the additional data sets that should be applied to customer-specific personal data or company data for that matter. And they can be obviously used to, kind of complete the set when it comes to, for example, a virtual financial kind of a agent, AI-powered personal assistant that can help with the financial matters. So they are complementary information, but I'm not an expert on, cross-border free-flowing data or anything like that. I'm more probably interested in, data flows in network, digital, multi-party processes where the real opportunities for value-add products and services lie. So I could elaborate from there if you wish, but I can leave it here as to.
If we have time, let's try to elaborate it a little bit later, because I'm conscious of the fact there are quite a few questions I'd like to squeeze in for you all. But look, let me take it over to Yngvar, because do you think we're likely to see more banks offering auto-switching services as part of their desire to actually offer more convenience to their customers?
Yeah, definitely. And I think at least if you have a lot of self-esteem and you think you're better than the others, you would definitely want that. On the other hand, if you don't think that, if you think you're lagging behind, you probably don't want to wish that welcome to the market. But and I think we're seeing it already. And if you look at other industries, like just the other day, yesterday, my freezer broke down, which is kind of crisis, because now that there's a social lockdown in Norway, you can't go out for a drink, which means you need ice cubes because you have to make cocktails yourself. So I was heading to the store to get a new freezer, and he asked, well, do you want to switch your energy utility provider? If so, you can get 100 euros off. And I was like, I don't even know which one I had, and and I can't think of anything as boring as utility bills. I mean, how is someone's energy better than another one? So it's like, yeah, of course, I save money, and to some people they might think the same about banking, which means there's a market for it, and which means we will likely to see more of it. Then again, when everything is tailwind and all is good, it's all about convenience and like who has the cheapest, the best price. When things aren't like that, like we've seen quite a lot the last 6 months during the pandemic, it's not just about convenience. It's also about like who can I call when like the big questions in life I need to discuss them, which is around my financial situation and also the stability of your bank and such. So it's everything has been tailwinds for some time, and then convenience is the driver. Now that there becomes more like drivers that are like higher in the Maslow pyramid, like the field, like the need to feel safe. There might also be like you want to have something else from those banks as well, which is something we've seen a lot the last 6 months, and then it remains to see how much that affects you just want to switch to another bank if you can get a better price or a better digital experience and so on. So it's too early to conclude, I think, but it's definitely an interesting area to watch.
Yeah, it's certainly the direction in which we appear to be heading. And Reuben, I want to bring you in because, look, let's focus on onboarding for one moment. How do you think banks can make better use of data so that they can offer the magical, seamless and secure experience for their customers? And how do you think this is likely to vary from bank to bank from your position at the coalface?
Yeah, it's a really interesting question, obviously, for us. And I think we've got to look at the way that we used to onboard customers. And the way that we used to onboard customers is we would ask them to present something that proved their identity. So we've heard examples on this call already around using biometrics as part of a way of verifying a user when they're trying to call into their bank. Now, that is a way of verifying a customer. The way that used to be done is the bank would ask them knowledge-based questions, ask you to prove your identity with stuff that you can find. That is quite a friction-full way of onboarding users or verifying a user's identity. But what we still see as part of onboarding use cases is that friction still is there. Customers are asked to go and get a proof of address document. They're asked to go and download a third-party application and prove their identity using a bank ID scheme and things like that. I think what we're starting to see forward-thinking digital banks look at is how can we allow a customer to prove their identity with their real identity, not with a code or a system that is associated with their ID, but an identity document in the case of Onfido or their face then that they have on their face and prove their identity with who they are, not with what they have.
Okay, and that's an interesting point because I guess, Reuben, that yes, you can make an experience seamless and it works very well as far as it can. You can improve it, but at some point there's always a danger that a customer might say, do you know what? The bank has gone a step too far in doing this because of this hyper relevance and personalization. And at what point do you, if you like, anticipate when the customer might think, hang on a minute, you've actually jumped the lights here?
Yeah, unfortunately, I don't think there's an easy answer to that question. I mean, and I'm sure everyone else can certainly come up with examples of what we personally would think would be going too far for maybe most people today. But I think the important thing there is that is truly a moving target, and that people are really, really different in how they think about integrity and privacy and going too far, and how they weigh it against convenience and sometimes the chance to just make a bargain. So not only are there sort of difference between individuals, but the same person, as we were discussing earlier, it's really situational between industries, time of day, over time. So it doesn't help that there are very strong feelings involved. Big data, privacy, AI, that's not value neutral terms. So and data processing it's pretty complicated. So the details matter, and explaining that in sort of common sense reasoning and logic terms isn't always easy, but I guess still that's what we have to do. There needs to be well-defined rules, regulations on the legal side, and we in the industry need to be able to present and explain in as plain terms as possible what we do, why we do it, and how the customer benefits. So there could be as long as the trust is there and the customer feels that there are options for them to allow or disallow use of their data, and in that relation, I think we will thread that needle. But again, moving target might change and will change as we get the new generation of customers entering the market in force now.
Absolutely. And let's bring it back to Heikki, because look, how do you think banks can know when to draw that magical line between hyper-relevance and privacy invasion? Because as Reuben explained, it's a very difficult one to determine.
Yeah, it is. How do people generally know what the others think? Okay, let me come back to it. I think banking has always been about trust. Of course, like, during the last couple of days, you've been talking about whether bank's going to be a utility service or niche player or trusted advisor, and I take the position of trusted advisor here. And privacy and security are imperative. And in order to gain access to that kind of information, personal data we've discussed during this meeting, for example, we must secure our customers' trust. And we also need to offer a clear value in exchange, because customers will give access to their personal data only in exchange for something with perceived value. They need to perceive the value really there. And if that value exchange or the trust on which it is based is broken, customers will walk away. So one needs to be transparent all times and operate on customers' consent and be also hyper-relevant and convenient. And going back to the question I asked you, you always want to ask for feedback. That's how we humans are built and learn. And that applies to humanized technology too. Okay,
and let me bring in Reuben, because as more personal data is used, it's going to be inevitable, obviously. It's going to fuel AI-driven offerings and services. What are the other ethical implications that banks need to be prepared for? Because that expression, invasion of privacy, it's almost like a catch-all. It encapsulates so much.
Yeah, it's a really interesting question, and I think so. Banks and financial services have been pretty poor at accessibility historically. We're not great at letting people in that we don't know. We like to see customers that have bank accounts with us or have bank accounts with our friends. We want to be able to really trust customers, and so we do accessibility for new customers, new migrants, students, young people pretty poorly. And when we start to use AI as we do in our world to help banks onboard customers, those same challenges are present. So one of the things that we've been looking at quite a lot is racial bias as part of AI algorithms. How can you ensure that the data that you've trained your algorithms in hasn't made your product bias against certain ethnicities? So if you look at the facial biometrics in general as an industry, that industry struggles with processing data from people from the African continent, for example, and that's because we haven't been able to train data using faces from people in that area. So one of the pieces that we look at quite often is how can we constantly retrain our systems so that the AI that we're using is trained using the right data for the customers that we want to support our banks onboarding. And that's something that I think is going to become more and more important in our space. We're focusing quite a lot. We recently won a COGEX award for best initiative within within accessibility. And so we're quite focused on it, but it is a challenge for the industry for sure.
Absolutely. And Yngvar, I want to come to you really just to sort of sum this up really before we move on to the much wider questions coming through from our audience. But what, in your opinion, constitutes ethical personalization? And do you sense that perhaps customers and banks hold different views on that?
Yeah, I think it's a very good comment there from Reuben that like on facial recognition, even it's not just a bias on racial matters, but also with for people with beards. So if I was to shave off my beard, maybe the face recognition algorithm wouldn't work. But also it doesn't work with face masks. So that's maybe someone will figure that out. That would be convenient. Maybe something we should do in the lab. But I think when it comes to the ethical personalization, banks beyond anyone lives out of trust with the customers, and well, that's it's not like that all across the world. In the Nordics, in particular, like people will trust government, banks, and insurance companies. And if you go to where we have our other office in San Francisco, those will be the three entities you trust the least. And well, with the given latest political climate in the US, you might have some understanding for that. But that's I'm drifting off here. But anyway, so that means that we need to be really careful about how aggressive we are on using data-driven personalization, much more than like social media and the search engines can do, because people have always trusted us with their money, which is of something that is obviously of a lot of worth to people. We know that works with AI and data-driven personalization that there's a lot of value in data as well. But the layman hasn't really understood that to the full extent yet. So they would trust like social media, for example, with all their data, because it gives you a lot of convenience. And in general, people love those digital services they get from them, but they still don't trust them with their money. And that's kind of the superpower or the super position that we as banks are in. And we need to, whatever it takes, maintain that. So never compromise on that. Unfortunately, people don't love the digital services of at least traditional banks yet, but that's something we can work on. But we need to improve on that, as well as on personalization, hyper relevance. But we can never do it faster than if we maintain that trust with the customer on the road. And that is like we talked about. That's a fine line, but I think we need to walk that together with the customer and not surprise them too much with how did they know that, because that is if we lose the trust, it will be very hard to gain it back.
Absolutely. A sound note on which to wrap up this part of the discussion, because it has been really good and extremely informative. And don't forget, we want to hear your voice as well. So please do get in touch with us to put your questions or comments to the panel using that Ask button on your screen. Before we go to the questions that you so far have sent in, I want to bring in Scarlett, who's been commentating not just today, but also for the rest of the week. Poor girl's going to be exhausted come Friday because the job doesn't end there. But Scarlett, are you there?
I am here.
Excellent, excellent, excellent. I mean, look, I'm surprised your fingers haven't fallen off, actually, because you've been scribbling furiously. But, I mean, what are your key takeaways from this discussion? And what are the questions, or what is the main question you'd like to put to the panelists?
Yeah, I think key takeaway, I love the flow of today's sessions, because I really feel like this panel just exemplified in some pretty specific details the conversations we were having earlier, and truly the focus on hyper relevance. So my question for you all, I have a ton, but I'll try to limit it to one. As Yngvar, to your comments on, Europe and Nordics versus America, as an American Swede, I can see both sides of this. And I would say that one of the things that I've been extremely impressed with the Nordics on is the ability to be so advanced regarding digital identity. And you talked a lot about the trust with the government, with the financial institutions. So this is really for all of you. But how do you think, since you have that trust and you have more information, I would argue, about your customers than most banks here in the United States or elsewhere in the world, how do you think banks can best capitalize on this information better to serve your customers where they are?
Okay, so who'd like to tackle that one first? Yngvar, would you like to try this first, and then we'll move it along amongst the panel?
Yeah, I think one challenge within traditional banks is the traditional way of thinking, which kind of holds us back a little bit, because we're very careful about, well, can we really do that? So yes, there's a lot of data, and I think we're underutilized it. And I think the fine balance is, once we really realize that we can use all this data that we have, which is, you're probably right, we probably have more than American banks, but they're still like they're digged down in some legacy systems, and like doing that upfront investment in digging it out of there is like, why would we do that? Do we really dare to do that? So that's like one school of thinking, and on the other side, once you get there, how to not overdo it.
Okay, and Reuben.
Yeah, I think so. I guess for me, the interesting thing here is you can have lots of data on an individual, but unless you are able to surface that data at the point of that individual interacting with your platform, it's kind of worthless. And so I think one of the big challenges that banks have at the moment is looking at how do I ensure that when Reuben comes and knocks on my door as a mortgage customer, I remember that Reuben is also a current account customer or a credit card holder. How do I connect all of those different identities? I know Fordrock are a big sponsor of this event, and I'm sure there's been lots of panels on that topic, but it is a really interesting challenge. Is we've got this data, but how do we ensure we show it at the right times?
Okay, and Heikki, I'd like to get your perspective on this as well, if you can.
Well, I probably missed the question.
Sorry, Scarlett, would you like to repeat the question?
Sure. So given the amount of data that you all have in the Nordics, especially with things like digital identity being ubiquitous there, how do you better capitalize or best capitalize on this info to better serve your customers?
Right. Okay. I think if you truly want to put the customer first and not think about sales, so it's not going to be about products or next best offers or anything like that, but it will be about trust-based, relevant, convenient experience that grow over time. But you have to be candid and discuss with your customers and keep the relationship intimate, and the magic will happen, like somebody said.
Now, I wonder who that could have been. Let's move on now to Reuben to get his response to that question. Reuben.
Yeah, so I think from my perspective, we have, in Sweden at least, been able to capitalize on that heavily. The story of Swish is closely tied to that of our national ID system, that is bank ID. And those services have grown in tandem. And I think just removing all questions and all the cognitive load around identification and sort of base services in the financial system really enables higher level functionality, such as payments, and further down the road, more advanced financial services. So just removing friction in a way that people trust, and I do believe you're right that Swedes tend to trust banks, and that it has been key in this process. But it's about building on top of trusted institutions around payments, identification, and building on top of that.
Okay, then let me now bring in some questions from our audience. And Scarlett, I'd like you to get involved in this discussion as well. And if we have time, I know there are a few other questions you have up your sleeve that you want to put to the panel. So let's crack on. We've had this one here from Anonymous, and they've said, WeChat have been leading hyper-relevance, combining habitual customer data, location data, and more to provide value to customers. Are any banks at this level, e.g. neobanks, not GAFA? Scarlett, do you want to tackle that first and then let me roll it along? I want to bring in Reuben after you've responded to this.
So I'm not clear exactly what the question is. It was how is WeChat doing it, and are neobanks taking advantage of this?
Yeah, basically WeChat, they've been leading the way on hyper-relevance. And what they've done in this question, they've combined habitual customer data, location data, and more to give value to customers. So basically, are there any banks which are operating in this field at this level which is standing out? They've said here, for example, e.g. neobanks, not GAFA, not GAFA.
Yes. So I certainly think it depends on the country. Neobanks are being very, very strong right now all over the world with the Revoluts, with the Starlings, with the Chimes. Chime, big here in the United States, valued at $14.5 billion. In the last 18 months, they grew by a lot. They were less than $1 billion 18 months ago, and tripled their revenue just in 2020 alone. So I think it's the location aspects are important, but I think it really goes back to, and we've had this conversation over and over again about that human element. So what Chime, as an example, offers is getting your paycheck 2 days earlier. So do they have data on you? Certainly. And they are going to use those data, by the way, now to get into lending and credit and things like that, because now they have so much information just based off of your debit transactions with them. But really what they do is, and why people are attracted to them is because of the experience and because of that emotional connection, where we are going through a very hard time as a world right now with COVID. And when they're coming to you and saying, we can give you your money 2 days earlier, which, by the way, at least in the United States, banks can do that too. They just haven't chosen to follow that path. That's really the main connector there. So the data plays a role, but in terms of accessing location, all those things, I mean, that's a piece of it, but it's more about that emotional connection and that value add versus the data piece, in my opinion. And what I've seen really grow traction crazy here in the United States and in other markets as well.
Okay, Reuben.
Yeah, well, maybe representing new fintech companies somewhat, it might be a bit out of place for Swish, because Swish is sort of built as a functionality between Swedish banks, and anything we do is and any data we process is for the purposes of what the banks want us to do, and so it's certainly my experience that the banks they have a lot of data. They try to do as much as they can with it, but there's a world of difference between what they rightly believe that they can do with their customers' data and what's possible in China. And I mean, there are many lines that needs to be crossed before we can arrive at services that are on that scale of personalization, and needs to move in lockstep with the perception of and trust issues that we have been discussing so far.
Of course. Okay. Thanks very much for that, Reuben. I want to get Reuben's take on that question as well.
Yeah, I guess the frank answer is no. So WeChat is doing stuff with data and stuff with identities that no other bank necessarily wants to do at the moment, but also can do, being the main thing. So WeChat has data on a whole host of things that a traditional bank or even a neobank just doesn't have access to. And I do think, to Robin's point, there's a big difference in terms of what consumers expect here in Europe to what consumers expect in China and what they'll be comfortable with. So frank answer to the question is no. And is it a problem? I'm not sure.
Okay, that sounds cool to me. Not sure yet. That's probably the way to answer it. But can I also throw that question out as well to Yngvar to get his take on it?
Yeah, I think again, going to China and experiencing that like, wow, this is magic. It's like Skynet again. But then again, as someone who knows what kind of data they would have to have about you in order to do that, it is first and foremost scary. Which is something I like when you take it to that extent. Even the layman would ask that question, and so I think would banks go there? Not sure yet. Agreed. In Norway, I think, and I don't know the strategy of on this from Vipps, which is like the Norwegian equivalent of Swish. But they because of their position, the brand name is like #1 in Norway. I think it's like so popular, and everyone trusts them because they simplify easy things. The banks kind of stand behind them, so there's no competition. And I think again, I don't know what their strategy is on that, but they seem to be taking on more and more of those simplifying for convenience type of everyday matters. But again, it'll be interesting to see if they can move there and maintain that trust with the consumers as banks as well as Vipps have.
Sure, thank you so much for that. And I'd like to bring in Heikki to get his response, because the overall vibe seems to be, look, it's a brave new world, and the banks aren't sure whether they want to go that far into it. What's your take in response to that question?
The question the other guys responded to.
Sure.
Well, I do appreciate. I mean, there's some fascinating about WeChat and stuff, but then again, it's China, and it's governmental thing, and it's like platform thing. I'd rather go to a direction according to my data principles, where everybody and everything would have a digital ID and verified facts around them, but all the data would be managed by the individual, him or herself, and the facts would be revealed on a zero knowledge proof basis to those that require it. And that would make a lot of sense, have that kind of a real-time economy network with party access.
Okay, let me squeeze in another question here, again from an anonymous viewer, but thank you so much for sending this in. Seamless onboarding should never stop. Existing customers are onboarded onto new products all the time. How can we make this more seamless, especially with business customers who have poor customer experience now, or CX now, and build more trust? Can I start this with Reuben, and then we'll move it along?
Yeah, and I think this is a really interesting sort of, I guess, the phases of identity verification we've seen going through financial services. So what we've seen over the last two or so years is digital banks really push this idea that you should be able to onboard customers remotely and not have those customers go into branch. They had to do that because they didn't have branches, and they kicked off this phase, and we've now seen traditional banks across Europe adopt these types of flows. The second phase, and the sort of, as I see it, and the way that we see it on Onfido, is the idea of them being able to use biometrics in order to reprove your identity throughout your customer journey. So, for instance, it is absurd in my mind that if I lose my credit card, I have to phone up my bank, wait 5 minutes to speak to somebody, then reprove my identity, have a conversation with the individual, and then get a card sent back to my home. We can use biometrics to remove the requirement for me to have that painful interaction, but also for the bank to pay money to have someone have a really quite low-skilled interaction with an individual, and instead have that individual sell products or do something that's worthwhile for that user and also for the bank itself. So reusing identities across the customer journey, I think, is going to be the second phase of identity verification in the way that we see it.
Okay, I'd like to get Heikki's response to that.
Okay, I would take it even further, reusing the same digital identity across different customer journeys, across different industries and companies. That's what I'm sort of aiming for. Self-sovereign identity management and the processes around that, and people and companies, managing their data by themselves and revealing facts about themselves, proofs whenever they need it.
Okay, Scarlett, can I have your response to that question? Do you want me to read the question again?
No, I got it. And it's one that I personally think a lot about. So definitely from the US lens, but more broadly, I think a lot of the fintechs have focused on the applications that are most relevant for consumers. And the reality is, at least here in the United States, as an example, small businesses make up 40% of our economy. So they are very, very foundational in us moving forward. And yet there are not enough, in my opinion, products and services really focus on them in meaningful ways. One of the challenges that we have here anyways is that in some cases, the institutions on the small business side still tend to be a bit archaic from a technology perspective as well. But because of COVID has accelerated the pace of this so much. So I certainly agree with the concept of that seamless onboarding. And I cannot tell you, in the last 2 weeks alone, I've probably had 5 or 6 conversations with fintechs who are addressing digital onboarding for small businesses. So it's certainly a very, very strong demand that people are looking at doing right now.
Okay, and Yngvar.
Yeah, I think there's. I like Heikki's idea that it should be basically an omnipresent idea across industries and across user journeys and so on. And we have a particularly fortunate situation here in the Nordics because we have those ID platforms because of high mutual trust between like the government and the bank industry and so on. But obviously on the corporate side, we're lagging behind, and I think, but that's natural. That it tends to be like that. Consumers kind of lead the way, businesses tag along a little bit later. But then also, what is much slower is also like regulation to allow for this, and tends to be stricter with businesses than consumers. There is we have examples in Norway that I'm aware of, where there's pretty good like digital identification and there's interaction between government and small businesses. But we don't see it like across industries, and like reusing that as once you've been identified by, for example, the government or so on, and then just take that with you and reuse for all your digital customer journeys as a business. We see it more in the consumer space so far. But again, we have more than any other geography that I'm aware of, the best starting point for building that for small and medium businesses as well.
Okay, and can I finally get the response to that question from Reuben?
Yeah, so we again, being in the Nordics, we have that ID system, and it works extremely well. On the consumer side, you're able to use that ID in pretty much any situation, and it's strong authentication, so it works for transactions and everything. For small businesses in Sweden, we saw so much innovation around the Swish platform when with COVID, and traditionally we've been strongest on the peer-to-peer side of things, but this spring we saw small businesses, because it's really easy to you get your QR code and your Swish number, you can start receiving payments immediately, and building on that simple functionality, integrating into your customer flows, even if those are at a distance, it's efficient. I mean, simple building blocks to achieve big things.
Okay, then, a great note on which to end. But look, sadly, that is all we have time for. Big discussions and not enough time as ever to fit in all those questions. But thank you so much to our audience for submitting them with your observations. Now, one last observation, just to close things out completely. Again, from an anonymous viewer, whoever you are, thank you. We should know how each customer and how they want to be engaged with. I think that should be, we should know what each customer wants and how they should be engaged with, as well as how much personalization to provide. The word "how" written in capital letters. You can't really fault that statement, really, can you? But look, we're going to be joined again by Scarlett tomorrow afternoon. As ever, she's been absolutely brilliant. So Scarlett, you can rest your hands. I know that you scribble away furiously when these discussions happen. But in the meantime, if you want to learn more about CCG Catalyst Consulting Group, and indeed the many excellent services they offer, you can visit their sponsor hub on GRIP, our online event networking platform. And a big thank you as well to all of our speakers, those from earlier in the session and our current group today. As ever, you have been brilliant, informative, and you've really carried this question along. And also a huge big thank you to our viewers, because you kept everybody on their toes. And thanks again to our sponsors, because without them this session would never have happened. Don't forget to visit their sponsor hubs to learn more about what they do, how they can help you. And before signing off for the evening, make sure that you visit those sponsor hubs, view the agenda and add upcoming sessions to your schedule. Get involved in the scheduled meetings and continue networking. That is what the platform is there for. And don't forget that MoneyLIVE will also be donating to the charity Trigger Bannen. For every meeting held on the platform and every connection made, you raise money. So the more that you network, the more cash you raise to go towards a good cause. So please do maintain that connecting. I'll let you know that we've had an excellent response so far. We've made fantastic headway with our donations. I'm not going to tell you how much money has been made on behalf of the charity. You can find that out tomorrow. But we will be back tomorrow at 10 o'clock CET for our final session, exploring the latest innovation in lending and credit decisioning. So have a wonderful evening. Goodbye, and above all, stay safe, and thank you so much for your company.